Hey, this is Glenda White with Verity Mortgage. We're here in DFW. We have an absolute honor to have Miss Lori Wilbur join us today with eXp Realty. Guys, we're just going to break it down for you. We are seeing so much going on with appraisals, with option, with should I bid over asking. So I wanted to bring in an expert in our market to kind of talk through some solutions and some strategies. But before we get started, one, we want to make sure you share this video. And if you think this is you, a client, a friend, a neighbor, a relative, go ahead and share it to them as well. Go ahead and like, comment, and subscribe below. And then Lori, we're going to go ahead and throw it to you. Let's get your introduction here. What are you about? Why do you think this is so valuable? And tell us a little bit about the market.
Well, thank you, Glenda, for that warm introduction. Again, this is Lori Wilbur. I am with eXp Realty. I do service all of DFW, so from Collin County to Grayson County to Tarrant County. I'm also a bilingual speaker, so if you have any family that is looking for a bilingual agent, I'd be more than happy to assist them. So as Glenda said, this is kind of just a very casual conversation on what I'm seeing, what she's seeing on the lending side, and what we can do really to educate our clients on how crazy this market is, right? So we'll discuss a couple of things, right? As far as appraisals, what do you do, right? A lot of people aren't comfortable waiving full appraisals. So what other options do we have? To be aggressive, you don't do your typical 7 to 10 day standard time. Now it's 3 to 5. So what does that mean? How does that timeline, now that it's compressed, help the sellers or help the buyers as well? And then of course, when you are bidding over asking, what does that mean? You're starting off in the negative equity, but how long does it take for me to get back on track, to make up the loss on what I'm paying today? So we'll go ahead. Glenda, what's the first topic of conversation you kind of want to go back and forth with?
Yeah, let's go ahead and start with the elephant in the room of appraisals, right? Because appraisals, no matter where you are in the country, that is really the first and foremost topic of any lending situation. If you've got a finance property with any lender, this is the bigger issue, I think, and it's bigger than us. I want to say it's bigger than me. It's bigger than you. It's bigger than our companies. So tell us what you're seeing on appraisals, on turn times, and how do we mitigate that as a buyer's agent and a buyer and a seller when clients are still wanting 19 and 20 day turn time? So how do we mitigate this, Lori?
So first and foremost, people are waiving appraisals. Don't ask me why. I mean, everybody, has their own way of thinking, and you've got to do what's best for your family, right? And a financial situation as well. So the options are, and what I'm seeing for submitting offers for clients is we're getting turned down because other offers are completely waiving appraisal. And what that means, right, to kind of put it in you and I terms, is a house is being sold for $500,000. They bought it, obviously for less. They maybe bought it just 2 years ago. Appraisals aren't caught up yet, just because the market, how crazy it is as well, that in order for you to win the offer, you have to completely sign a waiver saying, I don't care if the home comes in at $480,000 appraisal, I'm willing to buy it for 500. And that's only really asking price, right? Right now, what we're also seeing is that the prices are just significantly higher than offer price or sales price. So that $20,000 difference between the appraisal and the actual sales price, that is where the buyer has to come up with cash, right? It's on top of their closing costs. It's on top of any other fees, appraisal fees, inspection fees. Like, this is just because the bank is only going to lend you a certain amount, and it has to meet appraisal. And I'm sure, Glenda, we can speak about that in just a minute. So other options that, I am seeing are waiver or partial appraisals. So back to that $500,000 home. Let's say we know it's going to appraise at, we want to be a little certain. We're still not sure about the 500,000 price point, but instead of filling that gap between the 480 and the 500, we want to say we're comfortable with paying $10,000 more. So we want it to appraise at least at 490.
Okay.
So just want to kind of stop and see, I mean, what questions do you have regarding that?
So on waiving the appraisals versus partial appraisal, is there a certain byproduct? So those are really only good on conventional loans. When you do FHA, VA, and USDA, those have a little bit more dynamics. And so this is why we bring in you, our local, real estate expert, because it's you ultimately that has to make that offer to the selling agent. And you have to have the right addendums that go along with the contract. Couple of them that we've seen as the appraisal waivers are going in on FHA and USDA and VA, but those are really non-negotiable. So I think that's another segment we're going to look at. But how far up have you seen an appraisal waiver? And we are giddy about this. We just had it happen. But how far are clients really willing to go to get that offer?
So
what's the number that you have seen?
The highest I've seen is 160,000.
What? Did they win the offer?
They won the offer. And believe me, I'm working with multiple clients right now who, unfortunately, we've had offers rejected. And, I love that they've put their trust in me, and when their house comes, their house will be there, right? And they will win that offer. But I do go back and I do want them to see the offers that we did get rejected once they've closed, what they've sold at, so that they could see, more or less how far they were. Now on this one, when I went and told them that it was 160 over asking, they got discouraged. They laughed first, saying, what do these people do? And how do they have all that money? But yeah, it's going 50, 60. And you're seeing it in $200,000 homes all the way up to $1 million homes. The market does not care right now. Inventory is so low due to, materials to construct homes has risen. So that's what they're outweighing, right? You're paying more for rental properties as well right now. So it's like making smart decisions. Where am I going to pay more for a rental and I lose all that money, I have nothing to show? Or do we just go and put our best foot forward up front, win a home, knowing we're going to risk it not meeting appraisal? But there's just it's every buyer has a different personality. I have buyers who, like I said, just are not comfortable with that. It goes against everything that they've believed in. They're not willing to take that much of a risk. Right. And I also, that's where I bring in you, Glenda, my lender, to talk to them about that, to show them numbers of what the market's like, and, to forecast it as well, when or how long it'll take for them to rebuild and, make up that negative equity.
So let's kind of talk about that. This is where having a local lender, hyper-focused lender, could help during these strategies, because we've taken some of our clients that have shifted their money from these appraisal waivers, and maybe they had mortgage insurance, or maybe they were putting 20% down. And as a local lender, we're able to walk our clients through strategies of how maybe to buy out that mortgage insurance and a cheaper one-time lump sum payment, and then put 10% down on that property, to where their funds are now going to the property itself and remanaging their monthly payment too. So that's, again, kind of a side note of why you want a hyper-focused local lender that is not just a big bank of saying, hey, here's your pre-approval. They're not knowing of what it is. If you talk to the bigger banks that aren't local, it's just a number. It's not a strategy. It's not a game. And this is, we have conversations on Saturdays and Sundays. And this is really where, it's getting real with clients right now. It's hitting them in the pocketbook. And so having an expertise in that is really going to help. So let's talk about the next one that we had looked at, is really the turn times. How do we combat that on the lending and the sellers and the buyer side? I'm having and heard some lenders having a really kind of increased expedited process. But what they're not telling the client is they're spending thousands of dollars for one appraisal. Is that a good thing to say, hey, we're going to close you in 22 days, but the offset is the lender is now having to charge $1,000, $2,000 to expedite that appraisal? Well, that's a pass-through fee to the client. Is that a good thing, or is that a bad thing? So it's kind of a twofold of a 30-day typical contract time, right? But some lenders are saying, hey, to win that offer, we're going to pay and expedite that appraisal. But what they're not telling that client is that that appraisal is going to cost you $2,000. Is it good for lenders to be able to do that right now?
That's a great question, and I'm glad you brought it up. I think the main keyword I heard is lenders telling them. So, I mean, full transparency, right? That's one of my core values. Always, always make sure that they understand that, right?
Right.
Make sure what that means. Yes, you know, they want the house, but now guess what? You're already paying over, but now your closing cost fees have also doubled.
Right.
Instead of them being blindsided the week before, you know, closing. So I think there's buyers who are okay with it because of the situation, and they want to, you know, school registration. Summer's right around the corner. You can't register your children for new school districts until you have a contract. And actually, it's not even a contract.
No, they want your closing disclosure signed for sure.
So yes, people are doing it. Is it silly? Absolutely. But it's like I say, every family is different and will make decisions for their family differently. So as long as they have a great team, and, you know, I rely on you so much in the weekends as well, Glenda, where, you know, hey, let's get on a call with the client. Let's talk about what changed now and how the fees are going to go up. You know, is doing a standard 30-day contract going to win us the offer, or do we need the 21 days because they need that?
Right.
Majority, I think the sellers, I am seeing that sellers are working with us as far as they're asking for lease backs, things like that.
Right.
And, you know, I'm working with close dates. So the greed's not completely all there. Not that I'm saying my sellers are greedy, but in this market, they can be, right?
Right. They can be kind of picky and choosy. And that kind of goes to, you're already getting $150,000 over, but then you kind of put the nail right there as lease backs. So not only are the buyers trying to close super quick, we have more money out of their pocket. We have more money for the appraisal, but now the sellers, where is the seller going to go? Has the seller really kind of confidently put their house on the market and confidently put an offer in on somewhere else? Or is it really, does it matter for a 21-day close at that time period? Because now we're already doing a lease back for the seller, and that's not going to get them into a new home. So
it does matter. I mean, it's on the contract, you know, and
right.
I'll tell you one thing, and not, you know, that I did see recently which was one of the first things. I mean, we're seeing appraisals waived. We're seeing over asking. I recently was asked if for my clients to put in writing that if it didn't meet appraisal, that they would still pay an X amount of dollars over the appraisal.
What?
And the way our addendum, yeah.
So is that going special provisions, or is that on top of the money they're already? So let's break it down for our consumers watching this. What does that mean?
So what that means is if you do a partial waiver, right, at back to 500,000, and it only comes in at 480, like I said, you have to pay that difference. Well, let's say it comes in at 460.
Mm-hmm.
One, the buyer can completely leave the contract because it didn't meet their appraisal price,
right.
But they've already invested so much money. Both, you know, the sellers have taken it off the market. At this point, you work with somebody you trust, who's a great negotiator, who's going to go back to the other agent and, you know, negotiate on what we can do to make sure that the offer or the contract still goes through. So what they're asking and what I'm seeing is, let's say it doesn't, then can we get in writing that for some reason, if it does go under the 480, that your clients will not completely walk, that we will negotiate, and that they're willing to still put, if they offered 520 on the house, now it appraised at 580, that's 40K. So if it appraises at 460, they still want them to pay that 40K and pay 600,000.
So wouldn't that be a full waiver plus an additional? So now we're really kind of going outside of the terms of contract.
I don't think it's legal, honestly.
Okay, that's where I was going. Again, we're analytics and we're money people. And if that's on the outside of the contract, that sounds like it wouldn't be written inside the contract.
And what happens in real estate transactions, and I think it should happen all across any type of transaction, your word means something. putting something in writing on an email, I mean, they could easily take that and say they agreed to this. So in no way am I going to put my clients in that type of situation where then they can be sued because they did not follow the terms. So, you know, if people, buyers, sellers, if your agents are asking you to do this, talk to somebody, advise your lenders, you know, because the last thing you want it to think, oh, well, I just sent an email, it's not on the contract. It can be legally contract binding, and they can take you for sending out that email.
Whoa, that's mind blowing. So we're going to make sure we shout that to the rooftops. Okay, so let's talk about two more quick options here. One is the option period. Let's kind of quickly touch base on that. We know standard options in COVID were 5 to 7 days. What are we seeing now with option periods, especially with the rain going on? Like we had Snowmageddon first, now we've got Rainmageddon. What are we doing with the option period? And is that really, again, are they going above and beyond to win that contract with the shorter option period? But what does that do in the long term of a contract?
So we're seeing a lot of out of town buyers too. So that short option period from now 3 days, clients are having to fly in. Clients are having to schedule their inspectors, right? So that they give them enough time as well to turn around and provide their full report, right? And then during that time, your agent will negotiate repairs, things like that. What the big elephant in the room, like you say, people are thinking or assuming that there's no repairs being done by sellers,
right? Because
of the price that they're going in and stuff. That's not something that you should definitely count out. I mean, if you're working with somebody that's gonna fight for every single dollar for you, then definitely your agent's gonna go and say, hey, you know what, you did price it here, but none of these things were taken into consideration repair wise, plus we're paying more. We do want to meet in the middle and get some repairs done. So what's going on there is everything's rushed. It's just so rushed. And people can't handle that change of speed, you know? So it's what it does for the sellers is people are bringing down, or buyers are reducing that option period, but they're also putting so much more money, where before it was like a $200-$300, you know, 4 or 5 day option. And we have the option to back out, right, if things come up. Now it's 3 days and I'm seeing $2,000 option periods. Well, sellers are like, okay, I'll take it off the market for 3 days. I make
because they have 19 people in their line behind them, right? Like they don't really care.
Or they're working backup offers and stuff. So it's like you say, what are clients willing to do? I mean, they're doing everything to win these homes.
Oh my gosh. Okay, so let's really quickly touch on the last thing. We kind of had touched base on it prior, but we really want to dive into how far are clients willing to go to win this offer. So let's talk about the paying over real quick. We kind of touched base on the appraisal waivers and paying over, but in a money aspect of it, and really kind of English, what does that come out to equate to dollars? What's your return on investment, and how quickly, if you decided to pay, let's do 50,000 over asking price, how soon would you see your money recoup from you? Is it a good idea? So let's kind of touch on that real quick too.
So the way North Texas, and I mean, I think it's all of Texas, or I'm hearing about in San Antonio and Florida. So it's pretty much all over the US, right? Where this market has just increased tremendously and at the rate where we can't keep up. Going $50,000 over is is pretty standard right now. Your break even, if you put in, you know, you're asking at 500,000 or 575 and you put in 625, you win it. So now that's 50K over. I come to you, I ask you for this type of statistics and data, and it looks like, you know, you can provide numbers on what it's increasing year after year. So at this point, clients are seeing their break even point to get, you know, back the negative equity about 48 months.
Okay.
So that's 4 years.
So as long as they stay in their house 4 years, and typically right now it's 3 to 5 years, you know, it used to be 5 to 7 years. Now it's 3 to 5 because goals change, pandemics happen, jobs change, relocations happen. So that's really not, when you put it in terms, and I think on paper, 48 months is really not a bad time to break even and start regaining that net equity that you're going to have. Yeah, go ahead. So our appreciation is about 3.3% year over year. And so when you're paying that amount of money, you're talking about a net equity and your gain of $103,000. Well, there's your money right there. Like there's a net wealth and a net equity to go, pay student loans, pay your kids' college, so a 4-year period, just think about that, that's the time span of high school careers, college careers, and investment into your next home.
Yeah, it's not bad when you put it into thinking long terms. Yes, it's going to feel, you're going to take that hit up front and it feels like the end of the world. But if you really sit down with your advisors, right, and ask these types of questions, hey, if I'm putting this much, when do you see me? And if you have somebody like, yourself that can provide that type of data and they see it, because I'm a numbers person, I need to see everything as well.
Right.
And they see, hey, it's growing. That's a great investment. You're not going to get an investment like that anywhere else.
No.
We purchased a car and immediately it's negative equity, and you never make that up. In the housing market, it's different. And you think you don't take the chance. I get it. There's so much risk. But if you're in a rental position, you're still renting, and that's all money that could have been put towards your home.
Yeah.
So you have to kind of shift your mind a little bit. Yes, the market's crazy, but also, not put yourself in a financial situation where you can't do it either. So these are just good conversations to have. And if it's just not the time, I tell my clients, it's just not the time this time. We'll see what it does next year, because the last thing I want is that they're not able to afford their home.
Absolutely. We don't want that call 6 months down the road. Now, my gosh, this was so good. Great information. Now, Lori, if anybody wants to get a hold of you and talk strategies over real estate, how does one get a hold of you?
So you can shoot me a quick text, call me. I'm glued to my phone. Phone number is 210 area code 275-4254. My email is Lori Wilbur, WILBUR.northtxrealtor@gmail. And then of course you can find me on Facebook as well as Lori Wilbur, and on Instagram, and of course, on any other future conversations with Glenda.
Awesome. Well, I love it. I am so glad to be able to partner with you and talk strategies and really kind of talk to this market. I think next time we're going to expand more on the housing market, and not really of how to win the offer, but how to be different and dynamic. So I think that's what we're going to do in the next few weeks. But again, I'm Glenda White with Verity Mortgage, the mortgage coach DFW. And again, if you think this has come of any value, or if this really has hit home, go ahead and drop a comment below. We really want to see where your feedback is and where your mindset is. And we are all in this together. It's DFW. It's not just here, it's across the country. It will get better. So again, until next time, we appreciate you being on this, Lori. Otherwise, many blessings and have a great day.
All right. Stay safe and stay dry.